Hey guys, in this video, I want to talk about scaling your portfolio and taking your money to the next level. So how do you actually scale your portfolio? What do you do? What kind of strategies do you implement? How do you manage your positions? So I'm going to be talking about best practices that I've used to grow my portfolio to well into the 7 figures. And yes, I am withdrawing money. That's why my portfolio is not growing. But over the past 3 months, let's just see what I've done. About less than 7%. So not as impressive as usual, but still, I've scaled my portfolio actually not once, but twice. I just started with $2,000. Now, it's well into the 7 figures. So what do I do? Well, for me, I like to focus on high quality companies. A lot of you guys are focusing on companies that are fast growing, which is cool, but also make sure to actually look at the company's financials. So like, for example, let me go into Yahoo Finance. I'm going to show you something that I look at for Amazon. And by the way, if you want help scaling your portfolio, let's say that you're actually working with a good amount of money, like 50K, 100K, or whatever, then you can actually book a call with me personally. I will personally take your call. It's the first link in the description for my Discord community and my coaching. Okay, so let's talk about Amazon and go to the statistics tab. Something that I really want to look at is, well, several different factors. Let's just start from the top. So 1.64 trillion in market cap. That's cool. This is a pretty big company, obviously. Now, price to sales is actually 3, which is pretty low. But you need to take this into account in perspective because, for example, on Amazon, because they have such low profit margins, which is only 3.62%, their price to sales is not that high. However, if I look at a different company like, say, Tesla, the price to sales ratio is going to be higher. So I do want to keep track of price to sales ratios. I do have them in my mind. There is not a set rule. So a lot of people ask me, well, is 6 good? Is 5 good? Well, it really depends. So for Amazon, below 3 right now is good. For Tesla, below 7 is good. So both of these companies are fairly expensive. Well, Tesla's actually pulled back so much, has really, really shocked me. So, taking a look at the chart right here, it's currently at 185, which is, in my opinion, pretty cheap. I mean, this stock actually blew down, past all resistance levels. It has gone down so insanely that's below the Bollinger Band. The volume was very heavy, so overall, Tesla has come down a lot. And if I were to be scaling a portfolio, which I basically always am, I do live off of this portfolio, I would be looking at basically having a diversity of about 10 stocks. So right now, if I go to my stock positions, I only have 1, 2, 3, 4, 5, 6, 7, 8. So I only have 8 positions. I am looking to add 2 different stocks to my portfolio. So I don't necessarily have 10% and 10 picks. I think it really depends on your situation. So for example, I have several clients and students that are, let's say they have $150,000. Well, they don't necessarily want to have like, $10,000, $15,000 positions. Sometimes they go much heavier into stocks like Apple. And for me specifically, you can see I have 57.96% of my money in Apple right now. So why do I put so much in Apple? Well, for me, it creates simplicity. I don't want to have, too many positions. Again, 10 positions is plenty, but I also don't want to be perfectly spread out 10% each because, honestly, you want to have some higher weights in your higher conviction plays. That's what Goldman Sachs basically taught me. They had a high conviction list and I miss working there only because I had access to such amazing research. I was doing so much option research into different studies, like when do you sell puts? When do you do covered calls? What delta? How is the strike selection? For me, the way I manage my position like Apple, it's a bit bigger. So I am doing covered calls. Like right now it's at 192, my average is 181. And you can see here that I have multiple different positions. I have sold put options at 185, also at 190, and I'm selling covered calls. So I'm doing a few different positions. I'm trying to generate income. And I'm also, making money on the stock itself. So I'm up, looks like $55,000 on the stock itself. So look, if you have a portfolio that is, again, it's over $50,000, all you really have to do is give it time and start to, put your money into positions that are going to be high growth in a good sector. And for me, that's really technology. So Apple, Amazon, Microsoft, we do see these stocks hitting all-time highs. So, I do want to preface this that it is fairly risky investing in tech companies, especially when they keep hitting all-time high after all-time high after all-time high. But the thing is, a lot of people are asking me, do I wait for a pullback? And the answer is no, you do not wait for a pullback despite all the videos on YouTube. And that's for several reasons, because if I look at the 5-year chart on Amazon, there was some, pullbacks, but overall, the stock is just going up. Okay, so you can't really time the market. It's very difficult. Let's go to the max here. So it's very difficult. And for example, from 2020 up until 2021, so this is literally almost 2 years here, Amazon never went lower. So, if it was right here, a lot of people say, well, do I wait for a pullback? Well, the pullback never really came. I mean, it did come, but it took about 2 years and 1 month for it to come back. So look, all of this gains right here, to be honest, it was zero. Look, from 2020 to 2022, like a 2-year period, it's literally zero. But the thing is, if you're selling options and you're creating income, can you just imagine over 2 years selling covered calls? If you were selling covered calls on Amazon with a 50K account or more, right, you'd be pulling in like hundreds of dollars per week. So in a given month, maybe it's $400 to $500. And in a given year, it would be like, $6,000, $7,000. So over a 2-year period, while this stock really went up and then back down to nothing, you would have made pretty good money. So for me, that's why I'm a big fan of always doing covered calls. I can't predict if Apple's going to go to, let's say, I don't know, 200 per share, 250 per share. I can't predict that, but what I am better at predicting is that when I'm selling puts and I'm selling covered calls, that they're going to create some income. I'm going to see some income come in that's going to hit my cash account right away, and I can spend that money on, travel or whatever, right? I'm in Dubai right now. So I'm able to use this cash flow from options. To me personally, I have also been really reinvesting in my portfolio for a very long time. I'm just not at that point anymore because right now I'm kind of living off of this income. Plus I have another portfolio which I am growing a bit more aggressively. I'm doing more aggressive strategies. And this portfolio now is my lifestyle portfolio. So I encourage you to think about your money in a way of how can it work for you, not you working for your money. Too many people are doing this, full time. They're looking at the market, they're getting crazy, and they're watching all these YouTube videos. If you really keep it simple and you focus on covered calls, you focus on selling puts, do 30 delta. Okay, so for some of the technology companies, you can go a little bit higher on delta. You can go 35 because yes, they have a lot of volatility, and going a bit higher on delta will give you more money. So let me show you an example. Let's go to Tesla. I have not done so well on Tesla. And you may be thinking, how am I managing my position? I said in the beginning, let's talk about management. So Tesla went down a lot, and I'm down 13% in this position. I have 700 shares, 7% of my portfolio, and I decided to sell 192.5 covered calls. Now, you may be thinking to yourself, Henry, your average cost here is 215, and your strike price here is 192.5. Aren't you going to lose money? Well, yes, in theory, if the only metric that you're going to use and judge yourself by is your average cost, which for me is 215, and then the strike price, yes, I am going to lose quote unquote money. Okay. But the thing is, the portfolio that I have right now in our life right now is in the present moment. The past completely does not matter. And the future, although important to plan for, also doesn't matter. In this point in time, was this a good decision? I am asking you right now, how do you decide what is a good or bad decision in the present moment? Well, you do that by looking at the return potential today, not about average cost, not about where Tesla's going to head, because nobody knows that. You can watch countless videos and you're still not going to know that. You're really not going to know where Tesla's going to go. Instead, what I encourage you to do is, first of all, obviously, dollar cost average. This is one of the best strategies known to man. It is literally better than Warren Buffett, and it's better than anyone else's strategy. It's a dollar cost average. Now, for me, was this a good decision? Well, let's take a look at my history and see how much money I collected. And more importantly, it's not about how much money I collected. It's how much I collected as a percentage return. Okay, so if I expand this option right here, you can see that I did this on January 25th. Okay, it's been several days, but the timing doesn't matter. You can always watch this video in the future. I opened this up on the 25th. This option expires February 2nd. So this is roughly about a week or so, basically a week. Okay, so for 7 days, I have sold an option that is worth $325 per share. Again, the $2,000 doesn't matter. That's cool. Yes, that's how much I made, but what's important is the 325, okay? What is 325, okay, per contract in relation to how much I put up for 100 shares? So look, I collected 325 and 100 shares is worth about $18,000. So really simple, I'm going to take out a calculator and I'm going to do $325 divided by $18,000 roughly, okay? This is a 1.8% return, 1.8% for 7 days. That is literally so amazing. 1.8%. Are you kidding me? In 7 days? That's how you scale a big portfolio. That's how you scale from 50K obviously adding a little bit of money along the way and getting this 50K to 250K, 250K to 500K, 500K to $1 million. And then all of a sudden, your portfolio is generating you more money than you're spending. Your income exceeds your expenses. All of a sudden, you're in your retirement zone, which is basically where I'm at. Despite living in Dubai, despite spending $30, $40, and $50,000 a month, I am still making more trading options, and it's really simple and straightforward. It's because I'm using key fundamental rules of covered calls, selling puts. I'm sticking to my 30 delta. I am looking at technical analysis, of course, and I'm picking high quality companies and even stocks like Tesla. It is not going well for me. I have made 2 pretty much major mistakes this year so far, and I am honestly not off to a good 2024 financial start. Things are going well overall, but financially, I've been making mistakes. Tesla and Nvidia have cost me a decent amount of money. Specifically Tesla right now, I'm down $20,000, but I am confident that Tesla will eventually recover. And yes, I have given myself some breathing space because I'm only currently invested 7.81%. So what I can do is I can dollar cost average. I can buy another 100 shares in the next 2 weeks. And then another 2 weeks, I can buy another 100 shares, okay? Yes, I'm probably gonna do that with some of my income, but I'm also gonna do it with some of the cash that I have available in my portfolio. If you can add money to your portfolio, that is the way to get rich, guys. It's not a secret. I didn't scale $2,000 to $2 million without adding any money. I've added some money along the way. The majority I have made with option trading, but yes, I've also added money, and you have to do that, okay? You need to consistently add money to your portfolio, because if you consistently add money to your portfolio, then you can dollar cost average, you can purchase stocks for cheaper, or even if they are more expensive, that is okay because the stock market goes up long term. So you can definitely scale a portfolio from like 50K to $1 million in a span of 5 to 10 years. Now that takes time. Also, I'm more than happy to help you. Of course, I have the first link in the description. I've mentioned that I will personally take a call only from this video. Usually my team does take the calls, but I want to encourage you guys, if you have a decent amount of money, I am happy to personally help you in 2024 because it is my mission and my purpose to help other people become financially free. That's what I enjoy doing. For me, I am picking high quality companies. I'm making safe bets. I'm not doing anything aggressive. I am not growing my money super fast. I am not. I'm going after the safe returns because going after really fast money is possible, but it is only really necessary for folks that have a very tiny portfolio. Those guys are super desperate. And I'm not saying it in a bad way. I was also super desperate. But the problem is when you're desperate in life, you do not get good results, whether it's your health, whether it's your dating, you're going to chase women away if you're going to be desperate. And also with your money, if you are desperately trying to get quick results, you will make mistakes, you will be overly aggressive, and you will not have the best returns. So my advice is focus on consistency, focus on safety, follow this YouTube channel. Obviously, I'm always showing all my receipts. I'm showing my wins and my losses, and I'm honest, I have not done so well so far this year, but I'm very confident that the rest of my year is going to look fantastic because I'm always learning, I'm always improving. Hope you are too. Happy to help you. First link in the description. See you guys in the next video.